rare situation is allowing you to buy some ETF stocks for 50% off. Learn more at crushthestreet.com/profit2017.
Hello, everyone, and welcome into crushthestreet.com. I have a special treat for you today, and I actually got the pleasure of meeting with Jimmy Song yesterday in person. Technical guy. We're all going to him now to ask the questions. What is going on right now in Bitcoin? He's a thought leader in the Bitcoin space. His articles are going viral. Everyone wants to read them because they want to know what's going on here in Bitcoin. And quite frankly, he was able to give me a deeper understanding of blockchain technology when I sat down with him yesterday. And I really appreciated that because, look, I'm invested in this, and I believe blockchain technology is the future. So it's worth taking some time to learn about. And I can't think of a better guy to have on the show. He's a core developer, entrepreneur, principal architect at Paxos, and his great articles can be found at medium.com. Jimmy, thanks for coming on the show with me today.
For having me. You're really too kind.
Well, let's get started with how you got involved with Bitcoin, what caught your eye about it, and your early days. How did you get involved with it?
Well, so I think it's a similar story for a lot of developers. I first heard about it on Slashdot when it broke $1. There was a story, Bitcoin breaks $1. This was back in 2011, early 2011. I saw it and I was like, what is this thing? I've never heard of it. So I looked into it and I was like, it's digital money? How can this possibly work? I looked into it a little bit more, understood the monetary policy, at least not quite the tech yet. And I was like, hey, I need to go buy some of this. And back then, it was really difficult to buy Bitcoin. I don't know if you were around back then, but you had to like transfer money to Dwala and then go through Mt. Gox. There was no easy way to get it through PayPal or using a credit card or something like that. So it took too long, so I just said, let's forget about it. And I didn't think about it for another 6 months until there was the first Bitcoin bubble, at least that I experienced, where Bitcoin went from like $1 to $30 and then fell very quickly. Right around $30, I was very much regretting not buying some. And as soon as it started crashing, I was like, all right, I'm gonna do this thing. I'm gonna go open a Dwala account, get it in, and I did. It took a while, and then I bought some at that point, and I've been into it ever since. I started getting into Bitcoin development around 2013 after the second bubble, $166. At that point, I was like, hey, you know what? I'm a developer. I really should learn more of how this works. And I started to learn about it, and I got involved with an open source project called Color Coins back then. This was a sort of asset transfer on the Bitcoin blockchain. And I got involved with it. I enjoyed it so much, I decided to start making a career out of it. I then worked at Monetos, which was Bitcoin-related company. They're not really around anymore. And then I got involved with Armory. I was a VP of engineering at Armory. And now I am, and a principal architect at Paxos. And, it's been a really fun journey. I've been, learning a lot about it. And it's crazy because you would think that after a few years, you would have a good understanding of something, but Bitcoin is one of those things where there's always something more to learn. And whether it's like code or economic policy or game theory, it's like all of these things combined in one. And Jameson Lopp actually wrote a really fun article a few months ago. Nobody really understands Bitcoin, and that's okay. And I think that's so true. And it's one of the things that really attracts me to it is that it's never really, you're never really done learning about it.
Well, as a core developer, how long did it take you for you to understand, and I didn't mean core developer, but just a code developer, someone who understood some of these things that someone like me has no experience at all understanding? And I guess, what was the significance when you saw this? How different and how big of a deal was it for you when you were able to see it and say, wow, this is really cool or it's very speculative? I'm unsure about it. Tell us about that experience.
Yeah. So, I mean, when I first started to really dig deeper into it and, read the white paper, Satoshi's white paper front to back, I don't think I really understood the white paper. I still don't think I do. I mean, there's parts of it where you're like, oh, that's why, like you find out later as you're like coding some things, why it's designed a certain way. But just like learning about it, it was you recognize just how clever, how brilliant it was designed. I mean, Satoshi Nakamoto wasn't like the greatest coder, but as far as sort of aligning incentives and stuff like that, it was done really, really well. And actually, like I was talking to academic about this the other day, and he was saying how like the 10-minute interval is like somehow magical. There's sort of like it reduces risk. Like it's right at the point of diminishing returns. If you wait even longer, then you don't get that much more security. But 10 minutes seems to be something magical about it. Anyway, there's a lot of like different parameters and things like that. Just like the whole idea of a distributed ledger and blockchain and like sort of everybody having every transaction and like digital scarcity. It was quite mind-blowing, to be honest, but it took a long time for my mind to blow, if that makes sense, right? Like it slowly dawns on you, and Bitcoin has this sort of like this property about it where you recognize like how brilliant it is at first, but you really recognize how brilliant it is like as you get into it, and that's it's been one of the more fun journeys I guess in my development career is learning about this. It's just it's done in such a clever way, and I've enjoyed it. Yeah.
That's so cool. That is really cool. And after spending an hour with you yesterday, I must admit I feel a little smarter. And articles are actually technical too, and it's good because you're explaining things that are technical in nature. What's going on with the soft forks, the hard forks, and I feel like I can understand them to a larger degree because they're written in a way that are for people who really want to understand what's going on beneath the surface rather than just buy it and put it in your wallet and casually use it. It's for people who want to know what's going on. And that was so cool. And so that's what I want this interview to be about. I want to talk today, and you've been writing about it, how immutable or how mutable is Bitcoin. And I'd like to start off with the soft fork, user-activated soft fork, Bit 148, and the implication of that. So please explain to everyone what that is and what your thoughts are surrounding it with this August 1st deadline.
Sure. Bit 148 is something called a user-activated soft fork, and to really understand it, we have to go back another, 9 months or so, back to Bit 141, which is Segwit. These are the consensus changes to Segwit, and that was that started signaling back in November of 2016. And Segwit is this really interesting technology that basically makes that makes signature sort of segregated. That's why it's called segregated witness. But it fixes a lot of different problems, and it's also a block size increase in a way. And basically, it started signaling in November, but a lot of miners decided sort of not to upgrade to that, not signal it. And it needed like a 95% threshold, and it's never really gotten over like 45%. And the peak of that is right now, which is the last 100 blocks or so is about 45%. Anyway, seeing that it wasn't going to activate, there was a movement started by this anonymous developer named Shaolin Fry, who proposed, hey, you know what, like the miners are sort of not doing the right thing, so let's sort of band together as users and sort of decide on our own what the economic value is. And this is a right that every node operator has is to run their own software. And they decided, hey, we could run this software and we could do like sort of this flag day activation, except that wouldn't be sort of compatible with the current segregated witness signaling, BIP 141. 48 is basically a soft fork that says, if your block for BIP 141, then we are going to reject it, right? And a blockchain builds on itself, on the previous block. So this chain will never have any blocks that aren't signaling for Segwit. Every block will be signaling for Segwit. So instead of 95%, it'll get 100% basically. And that's the idea behind this August 1st fork. Obviously, that opens it up to there being two forks, right? Like two chains, basically. There's one blockchain where everybody's signaling for Segwit, and another block that are signaling and some that aren't. And that was sort of the BIP 148 proposal. Bitmain sort of had a response to that, and we gotten into more drama, which we'll talk about. But basically, the idea is that the users as a community can band together and decide on their own, hey, this is what we're going to do. And, like other economic, they're trying to convince economic nodes and so on. And they wanted Segwit that badly that they wanted to go, well, not Segwit per se, but they wanted to sort of reduce mining influence a little bit. And that's the idea behind BIP 148.
And so there's this another Bitcoin improvement proposal here, BIP 91, which you were telling me about, can front run BIP 148 and be a little more of a security for the main blockchain, the Bitcoin, the main Bitcoin blockchain here. So explain what's going on with that.
Okay, yeah. So after BIP 148 came out, and there was sort of some momentum behind it, I wrote an article about how there's a lot of game theory scenarios, and one of the things I said in that article is, well, if BIP 148 comes out, expect a response, right, from the miners, right? Because they're not going to just let that happen, because there's something called replay protection or replay attacks and wipeout attacks that could happen, and that would the miners chain instead at risk. So I said, hey, expect a response. And sure enough, about a week later, Bitmain released a press release saying, hey, if there is a user-activated soft fork, well, we're going to make a hard fork. And the hard fork will have these features, and it will protect against replay attacks and wipeout attacks by doing this and this. And it was a very interesting press release because it sort of gave insight into what they were planning to do. Anyway, that caused some commotion. But other than that, there was another sort of agreement about a month before at Consensus 2017, where Barry Silbert sort of gathered a lot of industry leaders and got them to sign the New York agreement. And the New York agreement was basically a compromise between Segwit and two larger blocks, which the miners had wanted. And it was called Segwit 2X. And Jeff Garzik sort of led that effort. And as part of Segwit 2X, they wanted to activate Segwit, but also double the block size. And that was sort of the goal. About 80% of all mining hash power, it looks like more than that now, were committed to doing this. A lot of exchanges, a lot of wallets and merchants, they all signed on to do this. And as part of Segwit 2X, the agreement that they signed was, hey, instead of this 95% threshold, let's reduce that to 80%. And instead of taking 2 weeks, BIP 141, by the way, and BIP 9, which it's based on, takes 2 weeks to sort of 95% of signaling for 2 weeks worth. That's 2016 blocks. They reduced that to like 56 hours or something like that. It's 300 336 blocks. 80% of 336 blocks instead of 95% of 2016 blocks. And, the community was kind of confused. How are you going to do that? And like, is it going to be compatible with the previous signaling and all that? And this is where BIP 91 came in. This sort of unified the two. It's essentially doing what BIP 148 is doing, right? It says, hey, if you don't signal for Segwit, we're going to orphan you off, or we're not going to accept that block. Except like BIP 148, which sort of does it at on a flag day, August 1st. They take 56 hours of miner polling essentially to decide whether or not to trigger it. And at this point, it looks like that's going to happen as long as Segwit 2x is released like July 21st. But that's essentially what BIP 91 is. It's front running the BIP 148, and it does essentially what BIP 148 would do, except it asks the miners to do it. And it looks like at least hash power wise, there's plenty to make that happen.
So, and then the significance of it asking the miners and doing it ensures what?
Well, it ensures that it will stay on one chain, right? There won't be a fork August 1st because, BIP 91 does essentially what BIP 148 does. It says, hey, if you're signaling for Segwit, then we'll accept your block. If you're not, then we're not going to accept your block. It's an illegal block. And that's exactly what BIP 148 does. So they're exactly compatible, and there can't be a fork as a result of that. Now there could be a fork with BIP 91, but like if you check CoinDance or something like that, then you can see like almost every block is signaling either for the New York agreement or for Segwit. There's very few blocks that aren't signaling for either. So it's going. If there are miners that are going to not signal, then well they're going to be out, but they're going to be very few, and I think less than 5%. I would be very surprised if it was even that high.
All right, Jimmy. So I want to ask you a final question on Bitcoin, then I want to move on to another topic here.
Mm-hmm.
Basically, what's your confidence level with this? And does it scare you, all of this that's going on? And, is it as immutable as you would like it to be? Or does this kind of make you a little nervous with the changes that can happen?
Well, so right now I'm not as concerned about the August 1st date. I was more concerned before sort of BIP 91 got merged into Segwit 2x. But there's another part of Segwit 2x that's coming up, which is the 2x part, and that's doubling the block size. And that got merged into the Segwit 2x repository as well. And essentially what that does is it doubles the block size 90 days, roughly, from when Segwit activates. So if you do the math, it turns out to be around November 18th, somewhere around there. That's when there's going to be a hard fork to 2 megabyte blocks. That is more concerning to me than August 1st. So there may still be a coin split. And for me, that's a bit concerning. I mean, I don't want Bitcoin to split, largely because, at least for me, the investment thesis has always been Bitcoin is a great store of value. And if you break immutability by splitting into two, it reduces that utility. And that's why people are buying it. And if that's not the case, then people will be selling, in which case price would go down. And I don't know, my investment thesis may be wrong. There's a lot of people I respect that think that after Bitcoin splits, that the price, the combined price of the two resulting coins will be greater than the coin before it split. And that may be the case. I mean, it kind of happened with Ethereum and Ethereum Classic, so who knows? But at least for me, that's kind of a big concern.
Sure. Well, you brought up the magic word, and that's exactly what I wanted to segue to, and that is the number 2 on CoinMarketCap, and that is Ethereum, getting a tremendous amount of attention, and a lot of multi-billion-dollar corporations jumping on board with Ethereum, and the market cap almost surpassing Bitcoin. It was really spiking high when it was going through that parabolic run there. It was basically another $100 away from overtaking Bitcoin. So let's get your general thoughts on Ethereum since it's so hot right now.
Yeah, so Ethereum is very interesting because at least in my view, their killer app is being able to launch ICOs, right? Like being able to launch additional coins on top of Ethereum. So they're sort of like a coin factory in a way, and it seems to the run up corresponds pretty well to like sort of popular ICOs and stuff. And if you watch the Ethereum price, it tends to spike on like the day before like a hot or like before BAT, for example, before some of these other ICOs. That seems to be their killer app. And I think in that way, Ethereum has a very different use case than Bitcoin, right? Like Bitcoin, I think, is sort of a store of value. Ethereum has a completely different emission schedule. Basically, it'll inflate forever because it's a constant amount of Ethereum being released every year, whereas Bitcoin has a 21 million cap. So they're different things. So and that's okay, right? Like people use different things for different reasons, and I don't really put that much stock in them because of Ethereum was sort of like something like 70% was pre-sold. It was kind of like an ICO. A lot of those coins, who knows what's happened to some of those, whether or not they're being held, it's hard to tell. And right now, a ton of Ethereum is sort of being held in the hands of these ICOs, right? The foundation, like you raise money in an ICO, you receive Ethereum. So when you hear a headline like they raised $50 million, it's not actually $50 million, it's $50 million worth of Ethereum. I don't know if I see ICOs as necessarily that good for the consumer. I mean, it's great for the businesses raising money. They're getting a lot of money before they have a product oftentimes. And that's, I don't know how that could really work, but I'll let the market figure that out. As far as Ethereum itself, they're having some problems, I think, with scaling. When there was one of the ICOs, I forget which one, there was a lot of network congestion because a lot of people were trying to get into that ICO. The way you get into an ICO is you send Ethereum to a particular address. So, I don't know. It seems a little more centralized than Bitcoin. Obviously Vitalik Buterin's the creator and he's around, and his word sort of carries a lot of weight in that community, almost like a benevolent dictator. I'm not sure how happy they would be with that sort of characterization. Centralized, and I think we saw that with the DAO, right? Like they sort of rolled back transactions that they didn't feel were legitimate or whatever, and that's not really within the spirit of decentralized currency. So for me, they're two different products, and to be very frank here, I don't really find Ethereum to be that interesting because it has the centralization element, and I got into Bitcoin in large part because it's decentralized, and I don't, like every other currency in the world has a central bank, and Bitcoin is the one that doesn't. And if a development team that sort of runs things or a foundation that runs things, then you're, then it's more centralized, and I don't think that's as valuable.
It is amazing how far ahead Bitcoin was, considering it was the first major cryptocurrency, and how much of its properties are still more desirable than a lot of these other cryptocurrencies that came online that have the very things that people were wanting to move away from. And pointed that out here with Ethereum. And good points regarding the DAO and them being able to roll back transactions that they thought were illegitimate. Mm-hmm. That's a big problem. If I sold my house for a bunch of Ethereum and then all of a sudden I don't have my house and they erase my Ethereum, that's a big deal, right?
Yeah, absolutely.
So anyways, Jimmy, I wanted to thank you for coming on Crush the Street and sharing your insight. If people want to learn more about what you're doing, your articles, and if they ever want to reach out to you or follow you on Twitter, let them know what they can find and where they can go.
Yeah, sure. My username is Jimmy Song on both on Twitter, Medium, and GitHub. I try to respond on Twitter if I there's a lot of tweets and stuff, so sometimes it gets lost. But I try to be friendly and polite and whatever, and treat other people sort of the way I want to be treated, I guess. But yeah, it's I'm available on all three. Feel free to follow me.
Good deal, man. Well, you're top notch, and I appreciate your time with me today. Thanks for coming on the show.
Thank you.